Natalie, where did we leave off?
I don't know.
84, 111.
I think.
84, 111 is the right answer.
Yeah.
Yeah.
Okay. Where is that? Keep going.
I have a feeling I've already covered a lot of this by the stuff I've said, but let's see. Natalie, since I called on you and you shut the door, who would you like to?
Jack Disler, JD.
JD? Do what? Huh? Nothing? No. What's number one say, JD?
Why do we care and why are we covering this revenue ruling? Let's answer the question with a question. What do you think happens when Lutz files a 2553 to elect an LLC be converted from a partnership to an S Corp?
Okay. What do you think happens?
They check a box.
Check the box. They file the physical action of filing a 2553. But what really happens?
The partnership converts to an S Corp.
Partnership converts to an S Corp. So what rules have we covered this morning that you might want to address by the conversion of the partnership to an S Corp?
We would have to do pretty much everything we've been covering this morning. So
And
start
what-
with 351.
Okay, and what's 351 say?
That's the taxable or tax deferred.
Okay, and what are the three elements?
Contributing property. Oh my God. Contributing property, solely really receiving stock, and whether they have 80% control or not.
Okay, and if we're filing a 2553, are we actually transferring property?
Doesn't that depend?
If we're yes, sorry. If we're filing a 2553 on an existing LLC, is their property really being transferred?
No.
No. Why? Because it's already there. Okay. So 351, we diagnose whether it's taxable or tax deferred.
Yep.
Then we move on to what?
357, which is basis in excess, or gain in excess basis.
Debt in excess of basis. And why do we stop there first?
So we can figure out if the partners need a basis increase for
And what's going to generate that basis increase?
if you have an asset that is worth more than the basis that you have, or how do I say that? If you have debt into an asset and that debt is in excess of the basis of it,
That's going to generate a gain.
yeah.
And that's a piece of the recipe. That's a piece of the formula laying under
What?
what code sections?
358,
And
362.
correct. See, you already got a gift card. Don't keep begging. Okay, so you got 358 and 362, right? And then what other code sections do we care about?
Going to be 1223, 1 and 2, and then 168
I-7.
I-7. Thank you.
Okay, so when you file the form 2553 for an existing LLC, you have to run the traps of those code sections, even though no property was really transferred. And for a gift card, Jack, what situation under 84-111 is applied when you file a 2553 and check the box on the LLC? If he doesn't know the first one there's hands.
Wouldn't that be situation 1 if the box is checked?
How do you guys feel about that?
Explain what situation.
Oh, Jameson wants you to explain what situation 1 is.
Just kidding.
Fine.
Just kidding.
Nope, Jameson just threw you under the bus, Jack. What situation 1 say?
Situation 1 basically says that you're giving the land or you're giving the property to an underlying partnership. That partnership's giving stock back to the corporation, and that partnership's getting liquidated.
How do you feel about that, Lucas?
I think he's right.
I think he's right too.
2 good cards for him.
Actually, I was considering it because that I don't think so. Let's see, what's this one? Oh yeah.
Yeah.
Oh yeah. Let me listen to this. Wow. Ooh, it's like fireworks. Here, I'm giving you this one, I'm taking that one back.
Okay.
That seems fair.
I think we should vote.
You do?
What, if I get the second one?
We have no voting stop.
Yeah, I think you just busted control. Okay, so let's see. I don't even know if that's what I was shooting for here.
Could I ask a quick question? It might be kind of dumb, but it was
Sure.
So when we're talking about control, what's the logic behind 80% as opposed to like 50% plus 1?
I have no idea.
Okay.
I mean, that's just one of those givens. And actually, one of the things I'm trying to shoot for in the middle of these sessions is trying to provide not only the rules, but to the extent the why of the rule exists. And 80%, my why is because. I don't have a good legislative reason. I don't know why it occurred. We were talking about 302 earlier with the redemption rules. And what's a redemption, JD?
When a business buys back stock.
When a business buys back stock. And I gave you the why of why 302 exists. Because you don't want to be able to bail out EMP by being able to have the corporation buy back its own stock. There's the why. And for me, when you see the why, knowing the rule becomes easier. But on 368C, it's because. I don't know a legislative reason or a purpose for why that's the case. And I'm sure there is one. Yeah.
They wanted to make it harder to make it tax deferred.
I like James's answer as much as mine
I
because.
researched it.
You did not. All right.
She's just trying to get a gift card.
He knows I did not research it.
Oh, well, okay. Boy, I did this on the board. Per Revenue Ruling 84-111, there's three possibilities. Situation one, there's the beginning, the land goes in, stock comes out, and then the partnership liquidates and you have the ending point. Is that what we did on situation one over there?
Yeah.
And then you have situation two, which says that the land is distributed on an equivalent basis to all the partners. The partners receive the land, they transfer it to the corporation, and the corporation has land in the end. That's situation two. Situation three is where the partnership has contributed to the corporation, the partnership then liquidates in the corporation, and the corporation has land. So, with that said, I don't know this with absolute certainty. But I said situation two up here was the one that we could recapture the basis. I'm pretty comfortable about that. In this case, it feels like you can still recapture the basis because if you follow the same logic under the ordering rules, and I've never been able to prove this, but it makes sense to me, is that what's being contributed, JD, who you want to call on?
Jameson.
I gave him 2 gift cards.
Great catch.
Okay, so Jameson, we're going to go back to our facts over here that we say that Pete has $1 million of basis in the external unit, and the internal is $100,000, and we missed it. So, Jameson, let's run down when we have a contribution of this partnership to the corporation. We've got to start where? What do we have to do to diagnose the transaction?
351.
351, and what are the elements of 351?
Transfer of property to the corporation. In exchange, you receive stock in exchange for the transfer, 80% control.
Okay, so, Pete and who was, I don't know whether that was Jack or Jameson at that point, but somebody. Pete contributes, and I'm going to just solely focus in on Pete. And we're going to eliminate the J just for a second, even though it's a partnership, but we're going to illustrate it. So Pete's outside basis is $1 million, correct? Inside basis associated with that asset's $100,000. So the elements of 351 was Pete transferred the asset, got stock selling exchange, and Pete and Jameson are both there. Do I have a debt in excess of basis problem? Because that's my next stop. Is there any debt in this transaction? There's not. So now I know that I don't have anything that needs to populate 358 and 362, share basis, asset basis inside. Okay, so 358's formula is what?
Gain realized and recognized, old basis of assets minus bit received, which is liabilities plus boot paid.
Okay, so Pete transferred what in this case?
Land, so property.
What do you transfer? Up here, what do you transfer? This is situation 3. The partnership interest was transferred.
Yeah,
Okay, so if the partnership interest was transferred, old basis in Pete's interest is what?
100,000.
No,
Now it's a million.
no, it's $1 million. That's what he paid for it. Pete's transferring his partnership interest, which has $1 million of basis in it. So Pete's old basis in his interest was $1 million. Gain recognized under 357C was 0. Boot received was 0 because no liability. So his basis in the stock is $1 million, correct? What's the basis of the asset of the corporation?
100,000.
No, $1 million.
Where's this 100,000 at?
It's still inside the partnership.
That's this. We're in scenario 2.
No, this is 3. So let's do it again because I think that's what's confusing you. We're here, Jameson, where Pete has $1 million of basis and land has 100K. That's where we're at, scenario 3. And the only reason I pointed at 2 is because that's where my facts were, not because that's where I confused you, and that was bad. So Pete has an interest in Z with $1 million. Basis in land that Z has is 100,000. Pete contributes his interest in Z. So your starting point is 351, transfer of property, sold in exchange, control it after. I have that. 350C says debt in excess of basis. Do I have any debt? No. So now I'm able to discard that. 358 says old basis plus gain recognized plus boot paid minus boot received.
Okay.
Old basis is what?
1 million.
1 million. Gain recognized.
0.
Boot received. Boot paid. So Pete's basis in T stock
It's a million.
is $1 million. Now the basis in the asset of the corporation, you start with
Old basis.
old basis, which is what?
1 million.
1 million. Gain recognized?
0.
0. So now, at this point, when we're at this point right here, T owns Z, and T's basis in Z is $1 million. So then I come over here. Z liquidates. Did cash come out? No. So if that's true, then the basis of the land coming out has to take carryover basis of the unit, which is $1 million. I've never been able to find that that's true, but I would clearly take that position. I know it's true here in 2. I know that's true.
You've never been able to find how to recapture some of the basis.
No, I'm saying I would take that position, but I've read that it works for situation 2. I've never read that it works for 3. I don't see how it doesn't work for 3, though. Let's see. What happens when you file a 2553? We've already covered that, right? How common is it for Let's to file a 2553 for a partnership that's taxed as an LLC? Sam?
What? Sorry, I was reading the page that you skipped over.
Oh, okay. Do you want to go back?
I'm just reading it.
Okay.
Make sure I don't have any questions on it.
Okay.
Sorry.
You're okay, Sam. How often do we file a 2553, Jack? A lot. I mean, we do, because we want to pay, we want to save people self-employment tax, correct?
Yep.
So that happens a lot, which means if you file a 2553, you're in situation what, Jack, under 84111?
One.
One, that's right. And then you have to go run through the traps, the corporate formation, which are what, Jack?
351.
Yep,
Their property transferred to use shares for it. And blanking.
control immediately after. Yep,
And then go 357A, use debt in excess of basis, see if you have a gain.
yep,
Then you go to 358
yep,
for basis and shares.
yep,
362 for the corporation basis and assets received.
yep.
And then after that, it's 23,
1 and 2.
1 and 2, and then 160. Is it 7 or 8?
8 I-7.
8.
Okay, so but at the end of the day, the filing of the 2453, there was no asset ever transferred. There were no shares ever issued. It's a tax fiction. So you have to be smart enough to know that you got to run these traps, even though it never really happened in reality. Let's see. Let's see what this says. Jack, what's this say? Let's see if this is consistent with what we just said.
5.
Yeah.
What happens when an LLC passes partnership filed in 2553 passes the next corporation? A, the LLC goes from being recognized by the IRS as a partnership, being recognized as a corporation. This infers that the LLC has checked the box to be recognized as a corporation. That embedded in the 2553 process is an inferred filing of Form 8832.
Okay, so let's talk about that. Actually, this might have some value because we've touched on this, but there's a lot of information in that sentence or paragraph or whatever we want to call it. So when an LLC does not have check the box, it's a chameleon. And what I mean by a chameleon is the taxation. Can I erase this? Everybody's good? Do you have something, Trent? Nope. All right. Okay. Pete owns 100% of the of a single member LLC. No, check the box. Jameson, what is that for tax purposes?
Disregard entity?
And disregarded entity. What's that really? What's that mean for somebody that doesn't know tax? What's that mean?
Doesn't exist for tax purposes.
Who owns it for tax purposes?
The individual.
The individual. But who owns it legally?
The entity.
The entity. So what happens, Jameson? We introduce Jameson into that.
Becomes a partnership.
Becomes a partnership by virtue of adding Jameson. Okay? And for those of you that care and are tracking and want to know, this is Revenue Ruling 99-5. And what Revenue Ruling 99-5 says is that there's one of two things. Jameson's going to enter this partnership in one of two ways. Okay? And anybody got a guess for a gift card what that could be? And this is just logic.
What was the question?
Oh,
How is she gonna
woke up Lane right
How
there.
is she gonna enter the partnership?
Yes.
She's gonna contribute.
Hold on, I got two hands. You get to, Jameson, you
Contribute
get one.
assets.
Do what?
Contribute assets.
Contribute assets. Okay, Jack?
Buying shares? Or
Fine.
it's a partnership?
LLC units. No, Jack, don't give up. What did you say?
Buying into it
How?
by contributing cash.
That we already got contribute. You buying is right. Stick with it, Jack. Buying's the right word. Who is available to sell?
What do you mean? Who is available to sell?
Yeah, who has the opportunity to sell something?
You.
Who? Me?
Yeah. You.
Right. So Jameson can buy my units.
Yeah.
Cross purchase.
Yeah, that's what I meant.
Exactly. It sounded exactly like cross purchase. It actually almost rhymed. Okay? Now, wait a minute. Lane, is it okay that Jameson got this?
I don't know, I said contributed.
Oh, you gave her. Well, I'm gonna here. Here, hold this. Here, hold this for a second, Lane. Here, hold this. Now, Jameson, take the other side. Here, now you two wrestle over it. Do what? Okay,
Next time I'll raise my hand.
fine.
This is fine.
These are very loose rules.
Yeah, that's why I didn't raise my hand and I just said it.
These are loose rules. We'll get to you. Okay, so either you can contribute cash or you have a cross purchase. So the chameleon, yes,
Does gifting fall under that?
I'll be damned.
Gift card.
No, that's a point. Well, you know what? Here's the thing. What's funny is the only people that gotten points are the people that are here to comment.
Yeah, they're smarter than us.
No, there was all sorts of points last year.
He's got the notes.
Do what?
He's got the notes.
He studied after this game.
Okay, so gift actually would work too. I got to concede that point. Okay, but again, we're going back to the concept. This is a chameleon. I don't know how to spell chameleon, but we're going to give it a try. Is that even close?
Common chameleon.
Is that even close, Jimmy?
You should just draw one.
Draw one.
Shit, I'm the last. You know the kid on the field for sports that picked last? Pictionary, I'm that guy.
Please draw it. For a gift card.
Okay, so now, Pete doesn't like that Jameson's always right. And he buys her out. He buys her interest out. Or Pete and Jameson, this is more common. Pete and Jameson sell to Thomas. Okay? So now, Thomas owns a single member LLC, correct? Jameson, you said this was disregarded, right?
Yeah.
Is this disregarded?
Thomas owned it, do you know?
Do what?
That's
Thomas,
good.
is
That's
this disregarded?
I just bought it. I don't know.
What do you think?
Yes,
I mean,
'cause
by
it's-
definition, a single member LLC without checking the box is disregarded. So, this is revenue ruling 99-6. Revenue ruling 99-6, which actually might be in here somewhere. I don't know. Maybe. What revenue ruling 99-6 says is that, forget it. I'm not even going to go down that rabbit hole. I'm going to go down the rabbit hole because Kaylee seemed upset. So, Kaylee's making me ask the stupid question. Pete and Jameson own XLLC. Okay? So, Jameson, who you want me calling?
Haley.
Kaylee. Let me ask a question. If Jameson sells you her partnership interest, what's the tax consequence of that? What did Jameson sell?
Shares of the partnership.
She sold a partnership interest.
Partnership.
And how's that taxed?
She would have an excess.
Gain excess basis. Sale or exchange of a partnership interest is taxed as capital gain under 741 unless there's a hot asset. And hot asset, Kaylee, is what?
You know, it's like.
Depreciated inventory, cash basis AR, and depreciation recapture. Okay? So it's a cap, but we'll push hot assets aside for a second. Jameson sold her interest to you. She sold what? A partnership interest. Right? And you went to Lane, poor you, and she missed the 754.
Oh,
Right? When you have the sale of partnership interest, you have the opportunity for 754. All that should be a concept that ought to be at least somewhat familiar to this room, if not familiar. So, what happens when Pete and Jameson sell their interest to Thomas? What did Pete and Jameson sell? Do what?
the land?
The land? Mm-mm.
So it is their interest.
They sold a partnership interest because that's what they had to sell. Thomas, is your entity disregarded or is it regarded for tax purposes?
Disregarded.
Disregarded. And disregarded means that Thomas owns, for tax purposes, an LLC interest or land.
Land.
Land. Pete and Jameson sold partnership interest. Thomas, when the dust settles, owns land. That doesn't seem congruent. Because, Thomas, if I sell you land, I sold what, you bought what?
Land.
I sold land, you bought land.
Yeah.
But in this case, Pete and Jameson sold a partnership interest, and you ended with land. So what is that? It's called an asymmetrical transaction, which blows my mind. So Pete and Jameson sell P and J sell partnership interest. T buys assets. By virtue of being disregarded on the buy side, Thomas bought assets. And Thomas has an 8594 purchase price allocation form that he has to fill out. Pete and Jameson sold a partnership interest, which is the sale of a capital asset that we have to now measure whether there were hot assets that have to recharacterize part of the gain from capital to ordinary. So that's Revenue Ruling 99-6. So the point is, single member, disregarded, popped into multi-member, now regarded, taxed as a partnership. Going back to single member, now disregarded. Since there's no check the box that it's been inflicted on X's tax consequences are going to be dictated by who owns it. Multi-member partnership, single member disregarded. And then you have to ask yourself the question of how did I go from single to multi? Because going from single to multi, over here, well, it could be a contribution. Contribution has 704C consequences. Cross purchase has gain loss, 1001, and gift has something in the 2500s. I can't remember that code section. Then going from multi to single, well, how'd that happen? Gift? That's possible. Most likely purchase.
Die.
Do what?
We die.
Well, but somebody's going to inherit that interest. So, who's the older of two of us, Jameson? That'd be me, right?
Did you say Did you say barely?
You can kick his ass later. Emma, get him.
I do act like an old person.
I was
You
born that
said
way.
it.
I'm
You're
either
90
90
years
years old or 13, one of the two.
13 today?
No, I'm 90 today. So, but if I die, my wife's going to inherit my interest. So that's going to be just a transfer of an interest. It's going to remain multi-member, most likely. So how did we go down this rabbit? Oh. So now, single member, an LLC is chameleon, correct? But if we don't want to be taxed as a single member LLC or as a partnership and fall under this chameleon regime, we can file Form 8832 to say, IRS, even though for state law purposes I'm taxed as an LLC, I want to be recognized for IRS purposes to be taxed as a corporation. And the 8832 says, I'm now going to be a corporation. And when the 8832 says, now I'm going to be a corporation, Lane, who do you want me to call on?
Jack. This Jack.
Jack. No, he already did it.
The other Jack
I
then.
did it.
Okay, who hasn't done it?
We're going to pick on Emma. We're going to wake up Emma. Emma, you all right back there? When we file the 8832 and we say we want to go from an LLC taxed as a chameleon to taxed as a corporation, what are the provisions that we have to run through?
Start with 351.
And I'm running all the way through. I'm not going to make you say them again. And where do we end?
I won.
Close enough. If you couldn't get it, I was actually going to make you go through them. The I one, we'll let that go because I think everybody has run through those. And I'm doing that purposefully because at the end of the day, you're going to walk out of here and you're going to forget most of this. And the more we repeat it, the more cognizant you are of the provisions that you got to run through. And you'll go, oh, there's this page in this book, and I'm going to be able to go to that summary page, which I was smart enough to put a Post-it on, and know the provisions that I now have to run through to get this done. So the filing of the 8832, even though there's no asset transferred from anywhere legally, the asset transfer is deemed to occur for tax purposes to a corporation solely in exchange for stock, and then you got to run through 357.3, 358, 362, 1222, 1223, 1 and 2, 168 I-7, right? That's my checklist. 8832 turns on this checklist, and I've got to run these traps because 357C, when I have a negative capital account, Lucas, causes me debt in excess of basis. That's absolutely right. I knew that's what you're going to say. Right?
Yes.
Okay, but embedded, the 2553, what is the purpose of the 2553, Sam?
Be taxed.
To be taxed as an S corp. So if you, the check the box form is 8832. So logically, you have to, and the IRS does push back on this, even though the 2553 form instructions say filing the 2553 for an LLC that's a chameleon says that we acknowledge, the IRS acknowledges that you're inherently filing the 8832. So because how are you going to be an S corp if you don't want to be a corp? So they're giving you the fact that you want to be a corp by filing a 2553. They are such a pain in the ass. File the 8832 because we've gotten pushback asking for where the 8832 is, even though the form instructions say the 2553 covers both.
Is one harder than the other to fill out?
No, they're easy. It's just another step, is all it is. Let's see. Sam, what's B say here? Do I care?
Partnership.
Obvious happens. 8411 applies. 3 situations. We've hammered that pretty well. Oh. Let's see what this says. Sam, what's our fact pattern? I don't even know what this is. We're going to take the guided tour together.
Okay. PJ Partnership is owned by Pete and Jeff. The balance sheet of PJ Partnership is as follows. building 100,000, like depreciation 60,000 for a total net book value of 40,000. Debt 100,000. Pete's capital account negative 30K. Is that right?
Mhm.
Okay. And then Jeff's capital account is also negative 30
I'm in balance, right?
for a total of 40K.
I'm in balance. Okay. Okay, so
You want me to keep reading?
I did.
Okay. Pete's external basis in the partnership units is 100,000. He purchased the units the day before ET converted to corporate status. PJ did not make a 754 election. Jeff's basis in the PJ interest is 20,000, including debt basis, or negative 30,000 without debt basis. Jeff has taken debt funded banks losses, which resulted in the negative 30,000.
okay. So the 20,000 for partnership basis, you have your basis plus debt basis. So in Jeff's case, he evidently put in $20,000 at some point, but he's taken $50,000 worth of losses. So the starting point was 20 of basis, 50 of losses to get to negative 30. So, and Pete bought the interest from somebody for $100,000, and evidently Lane was the tax accountant who did the return. You're really bad at this.
Feel
It's
bad for
754
anyone
stuff.
that was.
Okay, so is there a question here somewhere? Oh, what's this say? Keep going, Sam.
Okay. As noted on a previous page, when a taxpayer checks the box to have an LLC be taxed as a partnership be incorporated for tax purposes, then situation number 1 of 84-111 is the steps. Steps 1, partnership contributes assets and liabilities to newly formed corp and section 351. 2, the partnership liquidates and distributes the stock.
Okay. So do you want to run through this? Do you guys feel like you have the tools to come up with the answer? Let's see.
Is there a question?
Do
Do
what?
what?
Was there a question? Or what?
Can you actually tell me the tax consequences of this formation? Okay, Lucas, this is going to be fun for me. Turn around and you're going to work with Thomas and Jameson. You three work together. You three. No. Jack, you're turn around. And I guess you four.
So the question is what are the tax consequences
Yeah.
Yeah.
of the
Yeah.
Is Ansel in our
Yeah,
group?
do we get Ansel too?
No.
I don't
I don't
care.
care.
Answer's-
No.
Yeah.
That is not fair. No, like.